Yeah, Wednesday. What's up, everybody? Wednesday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. I want to welcome you back. We're going to do what we do each and every day, identifying both breakout and reversal trades from an educational perspective for you to be able to take action on in our 10 markets. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, and I have a question of the day, which I would love to get your feedback on. So let's put a comment down below. We look at 10 markets every day. How many trades a day do you take on average? If you're day trading, how many trades a day do you take on average? Just because you look at 10 markets, you may look at 10 markets to get one trade. Because when we look at yesterday, we actually wound up with a lot of open opportunities, but that doesn't happen every day. So I'd love for you to put a comment down below. By the way, the comments, they matter. The computers know people are watching. Okay, let's go ahead and dive in. So the S&P this morning, we're up 22 points. A little bit less than 1%. We did have a nice little breakout trade yesterday as the market made it all the way up to our short entry, and then we got a nice reverse off of our short entry. So our breakout worked extremely well, and then our short entry also hit. Now, there's a chance that maybe you got into this short entry and you used the 6 candle rule and did not hold on for the move down, and that's okay. Nothing wrong with that. But we've rallied up from that pretty hard in the overnights. We got a really strong move away. So what I'm going to look at right now is another potential breakout above this region here, since we are getting a bit of basing right now with higher lows. If we don't get that, you've got a little pullback area right here. But yesterday was a really good example of trading the breakout up to supply and then seeing the reversal. Same picture in the NASDAQ, as we got a nice little run in the NASDAQ. It came up to our first target. We then got a very strong pullback, so that if you miss the breakout on the entry, you actually got another opportunity here. And now it's continuing to rally up since then. Now, one of the things that we noticed yesterday was that as we were approaching this 15-minute supply level in the S&P, it was time to take some money off the table in the NASDAQ. And that's one of the things that's important about trade management, is managing the trades effectively. We did identify this supply level yesterday as a potential reversal if price gets up into that region. So, if we get a breakout above there, I think that serves as a good target. Maybe just in front of that opposing supply serves as a good first target area if we get into that position today. Looking at crude oil, we're looking at the September contract. So our September crude oil trade was really our trade of the day yesterday, as this is the breakout trade that we got in crude. And this one rallied right from here all the way up into our supply level, and then it hit the supply level and we immediately got a little sell-off out of the supply. Now, it did come into a confirmation entry on that supply because we're in a 4-hour, now I have a higher swing low, higher swing high. So even if you took the confirmation entry, then you were able to get a little bit of a move from that zone. We're coming up to it a second time, which means I cannot use this again inside of that level. But this is, where we start to look for those areas and those areas of opportunity, as price really gave us a nice run out of that zone. What I'm looking at for today is taking the origin of the breakout. So I'm going to remove these lower demands and go a bit higher and come back in right here to the origin of the breakout, in case this becomes the level where we would see price give us a return on an entry. We may get a breakout area, but as I go into a much bigger time period, we've put in a pretty nice little base. I wouldn't be overly surprised to see price continue to rally up. When we think about our impulse moves and corrective moves, our next impulse move up should get above this supply, and it would go into the next area of supply. Looking at gold. So gold, unfortunately, yesterday did not work out the way we had hoped, as we did get a breakdown, but then we just basically went a whole bunch of nowhere after that breakdown, and that was the one that didn't give us that opportunity. So when I'm looking at some of these areas. I'm still interested in this area as a potential breakdown. 1700 is still a whole round number area of support that, if broken, I think there's room for price to fall. But all in all, on my 4-hour chart, I'm just going to leave this be. Now, we did have a couple of members that were looking at iron condors, and those iron condors have been pretty strong because they've stayed inside of that range. So I think you should be looking at expiration in those iron condors. If you don't trade iron condors in futures markets, it's actually a really, really interesting way to generate some short-term income in those positions. Let's see. If you take a look next at our bonds and currency markets, I'm going to say what I've said every day in the bond market for the past 3 weeks. I'm not even going to analyze it until we get out of this range. Moving on. The Aussie. In our Aussie position, we looked yesterday at the Aussie for a potential breakdown, and we have yet to really get it. We got a little touchdown in the overnight hours, but no basing in front of the level. So I still need basing in front of the level. That being said, I think it's still a good opportunity for a breakdown, especially with these lower highs. So keep an eye on that one for today, where I could see that happening. The euro level from yesterday. Now this one, we rallied straight up in that euro position yesterday, and this was just a very quick move that caused price to give us a little bit of a stop out. And then it gave us a breakdown opportunity in the overnight. So those of you that traded the overnights, you got a really strong breakdown opportunity, which I think now may extend and create a reversal trade possibility. We have this little 15-minute wick over wick, which we're approaching right now, and so it might be a little late for that. But I'm going to wrap my lines around this one up here as our next level, in case we make it up into that region. Next, the Canadian dollar. So in our Canadian dollar trade, so we got a little bit of a move in the Canadian dollar yesterday. We got the breakout. It didn't really come down and get below my stop out point, but we really just went sideways. And we saw a lot of these upper wicks. Upper wicks are very important when I'm looking at a breakout because it tells me that there's selling pressure, right? And so, in our update, we do trade updates every day. For those of you that are Traders Army members, in our trade update, we talk about, okay, the CL level, take some money off the table, GC moving sideways, still in play for a breakdown. 6C breakouts show selling pressure in the recent candle, so it may not follow through on the breakout. And that was our point on the update, is to remember how dangerous wicks can be to trade management. So the wicks tell me, is there buying pressure or is there selling pressure, and how much do I need to pay attention to that? And that's what we saw happen inside of this one yesterday, was a lot of those upper wicks. The analogy I use is that I hate thorny levels that I think of those wicks like thorns, and I don't want to reach in for a berry if there's too many thorns in the way, because I don't want to get caught bleeding. So for now, I'm just not going to do anything in the Canadian dollar. There's a lot of other markets for me to pay attention to and to look at. Great British Pound, Japanese Yen. So in our pound level, we did get a breakdown in the pound in the overnight. Unfortunately, we didn't get a bit of basing in front of it for me to truly get an entry. So when I look at the pound, I think you still might have another leg down, as we're setting up a bit of a bear flag down here. But if we look up above, this is really the better level. Is this 15-minute wick over wick level right here? This is money, as they say. And then the Japanese yen, we've been patiently waiting, and we did get a breakout in the yen. So prices are moving just a bit in that breakout. So if you took that one, take your stop, move it up a little bit, lock some profits in. But I feel like this one's moving pretty well. So if you did not get in on that, and you're looking at, okay, what's the next opportunity in here? Well, on my 4-hour chart, I don't really have any quality supply for a little bit. And so if we get a bit of a pullback, even on the 15-minute, this level here was exceptional. Was a really strong reversal entry, so which means I can't use it again. I need to look possibly to this area right here as a small little reversal, though this looks to be a retest of this area here. So none of them are extremely great. But that's sometimes what happens when you get, after a breakout, we may not even get that retest. So those are our levels for today. If you have any questions, please do us a favor. Send us an email, support@tradersarmy.com. I thank you so much for watching. Remember to leave a comment down below. How many trades a day do you take on average? Leave a like on the channel. It helps a lot. I'll talk to you soon. See ya.